us out there, because this forms the very foundation of everyone's trading journey. So let's talk about what exactly are candlesticks and what can we really deduct from a candlestick. So every time you come to your chart and then you look at what is happening, most of the time you see the price action being represented in a form of a candlestick. And I don't want to go into the history of candlestick and all those stuff. I just want to talk about what exactly is a candlestick and what can we really see from a candlestick. They are basically like an archive that contains transactional information. I want you to see candlesticks like a receipt, because we have different time frames of trading. Just like if you come over here, you're going to see we have monthlies, we have the weeklies, we have hourlies, even seconds. We see every time that price move, they are represented in a form of a candle, and this is to help us to be able to know exactly what is happening in that market. Every time you're transacting between two currencies, that is you're buying or selling, you're going to see the strength of each currency represented in a form of a candle. And now I want you to see candlesticks like a calendar. When you go to your calendar, you're basically going to see that a calendar has months, and months are further broken down to weeks, and then weeks are further broken down to days, days are broken down to hours, hours are broken down to minutes, minutes are broken down to seconds. This is exactly what happens with your candlestick. So if we pick the daily time frame right here, and then we come over here and look out for what is happening, let's say this particular candlestick, if we enlarge it like this, we're going to see this particular candlestick. I actually depicted the color in green. You can choose any color. What I did was to depict a bullish, that is the strength of that particular currency, in a form of a green. So if this particular candlestick prints green, and then I see that green happen in that day, it means that that currency has strength for that day. That is what is basically saying. So for that complete day, it means that currency has strength, and if it is red, it means that currency is weakened within that day. So if I drop down to 4-hour time frame, what I'm basically saying is that within 4 hours, this is what has happened to that particular currency or whatever asset you are dealing with. So when we come to our diagram right here, we have different information that is captured on a candlestick. Basically what happens is that a candlestick will open at the beginning of that time of that transaction. If this is a daily transaction, that is a daily time frame, is going to open at exactly 0 o'clock. And then everything that happened within that day, that is exactly 24 hours, will be captured on that candlestick. So if it opens like this, we're going to see whether it is going to go up or it will come down. If it opens and closes above the opening price, it means that currency has gained value within 24 hours, that is 1 day. If it is a 1-minute candlestick, it means that currency have gained value in 1 minute. So it depends on the time frame you are dealing with. Right here, as you look at it, we have the open, we have the close, we have the low. The low simply means that currency has gone lower within that day, but it has not closed lower, but came back and still closed above. It went higher than where it closed, but it later closed below the high. So let's assume this is Bitcoin. Bitcoin opened today at 0 a.m. It opened at $20,000 and it dropped to $18,000, but later pushed up to $26,000 and even to $28,000 and later closed at $26,000. So this is $28,000. This is $18,000 while the opening was $20,000. That's basically what this information is saying. The same thing happens when we say a currency is bearish for that day. We simply mean that it opened at a higher price and then closes at a lower price. So that is basically what that means. You can see the high and the low. It opened above and closes below. Let's say Bitcoin opened at $20,000 at exactly 0 GMT, and then it dropped down to, let's say, $10,000 and even to $8,000 and later close at $10,000. That is what we basically mean by a bearish movement for that day. So usually that is exactly what you're going to see every time you see price behaves. So that is basically what that means. If I go back to my chart, I want to show you what that means. Let's say this is a 1-minute time frame. Can you see what is happening? Let's just wait for this to close. And then once it closes, we're going to see exactly how a candlestick is formed. So this is what we mean by a candlestick anatomy. I'm going to show you more of this, but let's just patiently wait for this to complete it within 1 minute. And then we're going to see, as soon as another candlestick starts forming, we're going to see it. Here we go. As you can see, this candlestick has started now. And then it started with pushing down. So it has created the low right here. Then this is the high, the low, the high. So if we put our line here, that is the low so far for now. We have not seen anything. It can push below and close. As far as this transaction is happening within this minute, it can be hour, it can be monthly. That's the same thing happening to a candlestick. This is a very basic stuff, but you need to know this so you can get every information in that. So let's wait for this candlestick to close, and then we'll know exactly what is happening with a candlestick whenever we see a candlestick being formed. So we are watching it. Let's wait for it to play out and see what exactly is captured in that. So they are just like a receipt, just like I told you, a receipt of transaction within a certain time frame, exactly 60 seconds. Then we will have 1 minute. Yes, it has just closed. Can you see what we did? This is the high, and then this is the open. It opened right here, and then it closes here. So this is how we have a bullish candlestick for a 1 minute time frame. This can be a daily time frame. It can be any time frame. So this is how a candlestick is formed. So if you go to, let's say, the 4-hour time frame, okay, if we go to the 4-hour time frame, we want to check some information about a candlestick. Let me show you some very important information about a candlestick. Can you see this particular candlestick? Let me just mark it out for you. This particular candlestick, this red one, in between these two green candlesticks, look at what is happening. I just marked out that particular candlestick, and I want to show you something very interesting. This candlestick looks like this. If you have this line like this, just something small with a red shaded portion, I want to make sure that I get this correctly. With a red shaded portion. Okay, and then we have something like this. Let me just get it correct. Now this is how this particular candlestick looks like. I have to stop and get the sketch very correctly before I come back now. Let's zoom this particular candlestick in the lower time frame. This is 4-hour time frame. If we zoom down this in the lower time frame, we're going to see a better information than this. Now let me drop down to the 15-minute time frame or the 1-hour time frame, but let me show you exactly what you may possibly see from this, because this is like this. This is the opening price. This particular place is where this particular candlestick opened, and it closes here, right here. Okay, remember that our sketch, it closed right here, and then the high was here. The highest level it went to, right here, and then the lowest was here. I'm holding my mic with my other hand. I can't hold shift, that's why I'm getting it somehow. So this is the open, the close, the high, and the low of that particular candlestick within 4 hours. If we drop down to the lower time frame, this is exactly what we're going to see. We will see that the price opened here and then pushed up to this level, came down to this area, and then reach here and then closes here. If you zoom this in the lower time frame, this is exactly what you're going to see. You're going to see something like this. This candlestick, what happened, will look like this. Let me show you if I can drop this down to the lower time frame. Let me just get only this particular place. Then you're going to see exactly what I sketched for you. So let's go down to 1 hour time frame or the 15-minute time frame so we can have a better information and a data. Okay, so look at this. Look at what I was trying to show you. Can you see price open here, pushed up, came down, okay, push again, and then closes here? This is exactly what that means. Any candlestick you see at all, you're going to do that for it. Let me get this correctly. Any candlestick at all you see, you're going to do that, and you will see exactly what that means. So this is the rationale behind every single candlestick pattern or formation you're doji, your hanging man, your shooting star, all those stuff are just the representation of data and the information captured in that. I have so many things to show you about candlestick, but I think it's very basic stuff.